All right, let's get started. We're actually not going to start with the charts here. We'll come back to the charts fairly quickly. All right. Okay, so let's begin. Today's topic is the difference between. First of all, how many people trade Forex futures? Today's topic is really taking a deep dive into the difference between trading the spot Forex market and the Forex futures. But how many people trade the Forex futures now? Anybody trade the Forex futures? So I'm going to give you tons of information on that here. Yeah, and for those that trade the Forex futures, how do you like the different? How do you like the Forex futures compared to the spot Forex? What would you say there? Just so you don't just hear it from me. We're gonna take a real deep dive into there today. I'm gonna show you most of the information you need to know. All right. Yeah. So better spreads, better fills, things like that. Yeah, there are very specific reasons for that. So let's take a look. All right. So I've got some slides I want to bring up here for you. Let me just capture them here. Okay. All right. Can everybody see that screen okay? Yes or no, and we'll get started. Just want to make sure. All right. Great. Thank you, Peter. Wonderful. So let's jump in. We've got about six slides for you here that we'll get through kind of fairly quickly, and then we'll get into the live markets, and we'll take a look at Forex futures charts, not spot Forex charts. Okay? So let's just talk about kind of the high-level differences between the cash spot Forex market and the Forex futures. Okay? All under the big title of the global Forex markets. These are the biggest markets in the world, right? And of course, some of the most important markets in the world. So as most people know, the spot Forex market has some issues. They are certainly getting better, but for the most part, there is no central exchange, no central market for the retail spot Forex trader, which is you and us, right? This is not really a regulated market. Okay? Now I know the NFA is trying to do a good job of getting in and regulating this market, but it's not 100% there yet. Okay. And then, of course, in many cases, when you place your trade in the spot Forex market, okay, you're trading a market that is made by the broker where you have your account at, right? So in many cases, the broker is on the other side of your trade, right? Okay. We've got some counterparty risk there and so on. So the spot Forex market, it's a pretty good market if you're going to do some bigger picture day trades, and certainly swing trading the spot Forex market. You can do that in the spot Forex market, okay, and be okay with that. However, let's talk about the Forex futures. Very different animal here, okay? In the Forex futures, there is a central exchange, a central market. It's the Chicago Mercantile Exchange, okay? I'm going to take you there in a few minutes. You'll see what I'm talking about, okay? That is the central exchange for the Forex futures. Now understand this. Whether we're talking spot Forex or Forex futures, it's the same market. The euro dollar is the euro dollar. The euro yen is the euro yen. It's whether it's spot Forex or Forex futures, it's the same market. It's not like one is going to move one way and the other one's going to move the other way, right? Okay. Okay. The difference in prices are the spot market. That is today's price right now. Okay. The Forex futures, if you're talking euro and spot, that's the exchange rate right now. If you're talking the euro and the Forex futures, now you're talking about the perceived value at a specific date in the future. Okay, but the ebb and flow of price is going to be pretty much the same. Okay. Transparent volume. You get that with Forex Futures. You're going to see that in just a few minutes. You know exactly what the volume is because there's a central exchange. Okay, it's real volume. The Forex Futures are very, very regulated. Okay, regulated by the regulating bodies here in the United States. And if that wasn't enough, remember the Chicago Mercantile Exchange is a publicly traded company. There's kind of two levels of regulation there, right? Okay. And then last but not least, this kind of ties into number one. Your trades are matched up on the Globex trading system. Now, Globex is the electronic trading system at the Chicago Mercantile Exchange. So when you put an order in, it goes. You're trading the electronic Forex futures market in the Globex system. Okay, not necessarily. It's not like the brokers. Again, not on the other side of your trade there. Your trade's being matched up on Globex. Okay. A little bit about the Chicago Mercantile Exchange. Okay. All right. Jose, we'll try to get there in just a few minutes with those questions. So I don't need to read this whole thing to you, but I'll kind of give you the highlights here just so you have an idea, and then I'll take you to the website so you can see exactly where to get the information you need. So here again, CME Group. Now, the Chicago Mercantile Exchange, not all that long ago, changed its name to CME Group. That's because it's made up of some of the biggest exchanges in the world: the Chicago Mercantile Exchange, the Chicago Board of Trade, and NYMEX. Right. So CME Group offers the largest regulated foreign exchange marketplace in the world. Okay, second largest electronic FX market with approximately 100 billion in daily liquidity. All right, and again, it's a central exchange. You can kind of read the finer points there. Okay, equal access to prices and fully disclosed costs, transparent, anonymous trading. Okay, consistently tight bid-ask spreads. I'm going to show you that in a minute in the live market, a few minutes. And again, the centralized Chicago Mercantile Exchange clearing ensures the safety and soundness of all trades. All right, and as you can see here, as I mentioned before, they are regulated by the CFTC. All right, let's move on. I really want to get to the good stuff here. Okay. So before we get into the, Harley is asking a great question there, saying, but spot is trillions, right? Well, it depends. If you looked at the entire spot market, you'd probably be right. Okay, I don't know the exact number, but again, that's not the market that you're trading. Okay, for the most part, when you're trading the spot Forex market, okay, you are you're trading the market that your broker, for the most part, is making for you, right? They're market makers. Okay, does that make sense? So, the but definitely better leverage with spot. Okay, a little bit better leverage. There's fantastic leverage with the futures. I'm going to explain that to you in a minute. But remember, you have to be careful with that leverage because what you're giving up to attain that leverage is there's some pretty important things that you're giving up to trade to attain that leverage. Again, you're with that leverage comes trading against the broker, and trading. When you're trading, when your broker's making a market, for the most part, it's a pretty small market. You're not trading $1 trillion market. You're trading the market that they're making for you, right? Okay. Exactly, Jose. Okay. Right. So Annie's, I see your question there. We just went over that on that other slide. Some of the advantages. Okay. And all right. Let me move on here to now. Can everybody see the website that I have up here? Everybody see that? Okay, great. So this is the Chicago Mercantile Exchange website, www.cmegroup.com. All right. And if I want to look up information, okay, I'm going to go right here to, hang on one second. You want to go to products. Of course, the website was just changed, so hang on a second. There we go, FX. Okay, so you used to just click on products, but now they've made it even easier for you. So you see I just moused over FX. Can you see what I'm doing, or do I have to keep capturing the screen? So I just moused over FX, and you could see all the markets that come up. Okay. Now, there's pros and cons to this, right? There are tons of markets in here. You can see we've got the majors against the U.S. dollar. Then we've got a lot of the cross pairs, right? So here's the pros. Okay, what you want to do is focus on the majors against the U.S. dollar, right? Get back to here. So this Aussie U.S., U.S. Canada, U.S. Swiss, Euro. Okay. Here's the pound, and here's the yen. Okay. Now, while you see the cross pairs, right, against each other, Euro yen and Euro pound and all those, the issue with those is you have to be careful. You don't want to be day trading those yet because the volume is not that great. Okay. The volume is in these majors against the U.S. dollar. All right. So for the time being, you're kind of limited to the majors against the dollar. So I just clicked on Euro U.S. Futures. Okay. When you get to this page that you're looking at now, okay, all right, you want to go to this, and don't forget this. You might want to write this down. Always go to Contract Specifications. Okay. So there's the page right there. And just to be sure, I'm going to capture it one more time for you. Okay. All right. So let's take a look at the euro here. So contract size. Okay. These are the specs. These Forex futures are contracts. Now they are not options. This is not anything like options. These are very the act of trading these is very simple. You're just buying or selling. Okay, I'll explain it to you here. But let's talk. I don't think people understand leverage sometimes. Okay. Now I'm going to show you. You don't need a ton of money in your account to trade this market. What you're controlling. All right. In fact, let me take you there real quick. To trade one euro dollar contract. Okay. Just a second. I will get there. Okay. Here we go. So I just went to the margins here. Just a second. I'll have it up for you. And there it is. Well, I'll have to find it for you, but let me get back to this just a second. Sorry about that. Hang on just a second. Yeah, now let's see. Yeah, increased capital requirements. I see what you're saying there. Definitely help. Okay. You definitely have to know what you're doing when you're trading, but you'll see when the problems are when you buy at demand levels in the spot market, the spreads really widen up because there's going to be a cost to doing the right thing that you just don't have in the Forex futures. Anyway, yeah, I'll get that. I'll get those margins for you. But back to this page right here, so you can see this contract size, 125,000 euros, right? That's a big, big number. To trade that, right? To trade one of those, which equals 125,000 euros, the margin you need in your account to do it is very small. It's less than $5,000, I believe. Okay. All right. I have to look and see exactly. Very low. Okay. the main number that you want to know here, okay, is that the minimum price increment. So go to the CMEgroup.com website, Euro US dollar futures, and then click on contract specs, and this minimum price increment 0.0001 equals $12.50 per contract. So let me take you out to TradeStation for a second, so you can see exactly what that is. I'm going to make it real simple for you here. So we're looking at the Euro futures, all right? So you can see right here, let's take a look at this 5-minute chart, okay? It's trading right now 135.36 right here, okay? 135.37, and now 135.36. So look at that last digit, 36, 37, 38, okay? Every one, we call that a tick in futures. In spot, you call it a pip. In futures, you call it a tick. So that last digit, that last increment, is worth $12.50 for every contract that you trade, okay? So from 39 to 40, like you see here, you are making or losing $12.50 for doing one, all right? Okay. Does everybody understand that? Okay. Now, they're not all the same, okay? The British pound is less, the Aussie dollar is less, okay? But the euro, the yen, the Swiss, those are all $12.50, okay? And Jason, look on the website to find out exactly what the margin is. It's very low, okay? Yeah. So that's a big thing. So now what does it cost you to trade these things? Right? Remember, in the spot Forex market, you're often paying, the euro is probably the tightest spread there is out there, okay? Okay. But, what is an average, what do you pay on average to trade the euro spot? What do you really pay? Not always what you're seeing, but what are you really paying? Okay. 2 to 3 pips, all right? And what exactly is that costing you? What exactly is the cost of that for you? Just to make sure everybody knows here. Right? Because, again, in the futures, the vast majority of the time, and I'm going to show it to you here, okay, you have to figure out what your real costs are there. So if you look at the euro here, I'm going to highlight this one. You'll see, in fact, look at these numbers right here. There's the bid and the ask, okay? Yeah, so $30 on a standard. Now compare that. Now look at this spread here. It's almost always one tick. You see that? You're hardly going to see it expand to more than one tick. All right? Okay? But the cost, the actual cost, but you're not, the spread is not what you're being charged by your broker if you trade futures. Okay? You're paying a commission. That's what you do. You pay commission in the futures. And commission is typically going to be, everybody's a little bit different, but most are going to be about, $2 to $2.50 in and $2, you're talking about a $5 round term trade on average. Okay? All right? With a very tight spread of about a tick there. You could see it 38.39, 39.40, right? Okay? And again, the cost to do a one lot is going to be about $5 round turn. Again, every broker is a little bit different. Some will be a little bit less, some will be a little bit more. Make sense? Okay? All right? You're not paying the spread to get into this market, right? The other thing is, when prices get into key levels, let's say price rallies up to a key supply level, right? You think it's going to turn lower. What happens in the spot market? Does the spread get wide or does the spread get narrow? What happens when you get into a really key supply level? Okay. Yeah, it tends to get pretty wide, right? Okay. Yeah. Why is that? Because if you're trying to sell, the broker's thinking, all right, well, this is a supply area. You want to sell here? That's fine, but it's going to cost you. because they're not going to lose money on the trade, right? Okay, so they've got to price in that cushion, that profit cushion for themselves. Okay, that's how it works. Okay, right? Okay, but in the Forex futures, you're watching the spread right here. I mean, look at the Euro 5-minute chart. You just traded up into supply. This thing is constantly one tick. And again, it's only costing you about $5 round turn per contract. All right? All right? So even if the spread was, consistently no greater than 2 pips in the spot market for this market, it's still extremely expensive compared to trading the currency futures. All right? Makes sense? So from 40 down to 30, that was 10 ticks times $12.50 per one lot that you have on. Okay? All right. Okay, let's move on here. So now how do we trade these things? Okay? Let me get back to the charts that I've captured for you here. Now what I did was I just took some pictures of some recent currency trades that I've done, and hopefully this will help you. Okay? So not only are we talking about the difference between spot Forex and Forex futures, but let's get into how we trade in the whole supply-demand concept. Okay? So what I did also too was I cut and pasted my daily statement from onto the chart here. Okay. Yeah. So and again, just for anybody that came in a little bit late, again we're discussing the difference between spot Forex and Forex futures. And if it sounds like I'm pro futures and against the spot Forex, that's not exactly the case. Remember, for the Forex futures. For people that are day trading futures, I would argue that you're going to have a better experience day trading the Forex futures than you will day trading the spot market, right? For the various reasons we mentioned, in my opinion, the odds are still kind of stacked against you on the spot side for day trading, that is. All right? But anyway, and again, I have nothing to do with the Chicago Mercantile Exchange, believe me. I'm not here to just promote the Chicago Mercantile Exchange. And I kind of felt weird about this topic today because I know it's kind of a hot topic among the professionals and brokers and everything. But I thought, my thought on it was, you know what? If you're just honest about this whole thing, all it's going to do is create a better, market for everybody. Okay? Yeah, so there are minis that are smaller than the $12.50 per tick. Okay? And when you get to the Chicago Mercantile Exchange website, you want to look at those. You want to also look at the micro minis. Those are tiny, tiny little contracts. All right. Volume is not great, but it's okay in getting better just to get started and practice with. Right. Okay. Now, if you're swing trading and longer term position trading, the spot market's probably fine. Okay. And of course the Forex futures are fine for that as well. All right. Okay. Yeah, volume is not great there. So let's take a look at this chart. I could tell you. Okay. Yeah, I don't know what's wrong with the mic. The mic should be fine. So I can tell you that the first market that I ever traded, and that I traded probably more than any other market out there, are the Japanese yen futures, and that's because when I started my career on the floor of the Chicago Mercantile Exchange, that was the market that I was kind of responsible for and watching more than any other in the beginning. The yen. So this happens to be a yen trade from just the other day. Notice, remember, we talk about supply and demand, right? Retail and wholesale. Over here where I'm pointing, okay, this area is the origin of a drop in price. So relating order flow back from my days on the floor of the Merc to the charts, I know what this really is behind the scenes. This picture represents a price level where supply exceeds demand. There's a big stack of sellers right here. How do I know that? How can I be confident in that? Because prices could not stay here. They had to drop away from this level, and they dropped in strong fashion. Okay? The only reason why that happens is because supply exceeds demand there. As we practice in here, in the webinars at FX Street, we wrap 2 lines around that level and carry it forward. If and when prices come back to this level, I have a pretty good idea of who is buying there. And those are the buyers that I feel most comfortable selling to. Those are retail novice buyers. How do we know that? We know that because they're making 2 mistakes. The same 2 mistakes that every consistent losing trader makes. Mistake number 1, okay? They are buying after this big rally in price. Mistake number 2, they're buying right into a price level where the chart already told us supply exceeds demand. Selling short right here at this bottom line with a protective buy stop just above the area and a target right here at the drop base rally demand, ended up in a $1,500 profit. Now, now take a look here though. This is what I wanted to point out to you. This is a 5-minute chart of the Japanese yen. Okay? Take a look at the entry point here in the high compared to the level itself. Okay? And I wanted to specifically bring this one to your attention. Look at the price points here. We're talking 3 or maybe 5 ticks at most. What do you think, how do you think this chart would have looked if I took the exact same trade in the dollar-yen spot Forex market? Okay. How do you think the chart would have looked right here if, let's say we all went to sell short right here at this level in the spot dollar-yen market on the 5-minute chart with a little 5-pip spread here? Okay. Yeah, what do you think would have happened there from your experience? Again, I can answer the question, but I want to make this interactive and, a lot of you people have been trading for a long time. Okay. Right? Yeah, so you can see the vast majority of people are kind of going where I'm thinking. Most often in this case, if you try to sell short here, often you'll see a little spike through this level, and sometimes you can get stopped out up here without even seeing the candle print or the price print on the chart, right? Has that ever happened to anybody? Okay, so, right. So I just wanted to point out to you, how small this range is and how efficient, these Forex futures can be. Okay? And again, I have no alliance to the Chicago Mercantile Exchange, just like I have no alliance to the spot futures market or brokers. The only people that I care about are you. Okay? That's what I'm here for. So I just want to expose you to some of these things. And anyway, now does that mean that every Forex futures trade is going to work out? No. Again, the first thing you have to do is be a good trader, have the right rules, have the right strategy. The problem that I see that comes up, is that it really bothers me when I see traders, especially like our group here at FX Street, that try so hard and they have all the rules. You put so much time and so much effort, and even though you're doing it right, now we have to battle a market maker or a broker. That really bothers me. So, anyway, good example here of a very short-term trade. So, okay. Yeah, so again, I saw a couple of questions about the level itself. This level was sitting just under a rally-based drop supply level. The reason why I chose this one instead of the upper one was because of how prices left the level. Okay? That keyword origin right here. The origin of the move is right here. Okay? All right. And again, what makes these markets so efficient? You don't see a lot of wicks and tails like you do on the spot chart on a small time frame, because again, there's a number of things. You see the volume. There's the big one is there's a central exchange. This is all done on a Globex system. Okay. You may have a futures account at TradeStation, maybe at Interactive Brokers, or maybe at one of many different futures firms out there. All those orders are being processed through the Globex system, one central market. Okay. Okay. Let me just read back here. Eric, I might not be understanding your question, but Globex is the electronic order system, trade matching system, whatever you want to call it, at the Chicago Mercantile Exchange. Okay. Let's see. With Forex Futures, does volume the increase per tick as with the spot? Again, I don't understand that 100%. I think you may have put one word in there in the wrong spot. But hey, Austin, if you wouldn't mind retyping that, I'll get to it. Okay. The CME res, that's CMEgroup.com. That is the home of the Forex Futures. Okay. The Forex Futures are a product that you can trade. Okay. And they are found at the Chicago Mercantile Exchange. So for more information, that's why I shared it with you. You'd want to go there. Okay. Currency options, Rob, are fine. They're great. I've traded tons of yen options over the years. Okay. All right. Okay, let me just read back here. Yeah, Harley, good point. I'm trying not to miss any questions here, but yeah, once you go there, you'll see all the other futures markets as well. There's some really good ones. Let me see. Yeah, so Alex, I saw a question about ECNs and brokers and stuff. 1 second. VAM, CME is not the only place, a futures exchange out there. There are some other big ones, but the Chicago Mercantile CME Group now, I believe, is the biggest one in the world. So, but Alex, good question there on the brokers. What about ECNs and stuff? So if you're trading futures and you're looking at a matrix, okay, is that kind of where you're going with this? All right. If you're trading futures, and let me get back to this. Let's say you're trading futures, and for those that trade futures, you probably have seen the matrix out there. It's showing you like in real time the size on the bid, the size on the offer. Just like level 2 for stocks, I would not focus there. Okay. In the level 2, you have ECNs, market makers. In the matrix, you have the same thing for futures. But remember, what goes on there is not those two entities are really more of a place where people can disguise their intentions. Okay, I wouldn't go there for information. For example, if you look on a matrix and maybe let's say you're watching the S&P 500 futures, one of the biggest futures markets in the world. If you're looking at the matrix, you'll see there's hundreds, sometimes thousands on the bid and or the offer, right? But then you look at what's really trading and they're one lots. See what I'm saying? Okay, so be careful with that. I wouldn't go to matrix for information. I would stick purely to the chart. The chart shows you, the chart doesn't lie. Focusing on the price levels where prices could not stay at and had to move away from in strong fashion, okay? Those are price levels where supply and demand are out of balance, okay? All right. So let's take a look at this example. Here's another one. Just another one of the yen. Yep. Now here's an hourly chart of the yen. So you can day trade Forex futures. You can swing trade Forex futures. You can position trade Forex futures. Remember, they do have an expiration date 4 times per year, but that's okay. That's rollover week. Again, first of all, I'll say this again at the end, but don't start trading these things until you understand what they are. They're not complicated. They're very, very simple to understand and trade once you know what they are. But gather information on them from the Chicago CMEgroup.com website. And also send me an email. I have plenty of information on it for you. Okay? All right, let me refresh the screen for you. Take a look at another one, and we'll speed things up here. Again, origin of a rally right here, demand. Origin of a drop right here, supply. Retail prices, wholesale prices. Call it whatever you want. Okay? Prices drop down into, okay, the demand level, right? So remember, we're buying right at the top black line with our stop below the bottom of the area. That's our risk. Compare that distance to the distance between your entry point and the supply or retail level above. Okay? And if that risk reward meets the minimum requirements in your trading plan, take the trade. Okay? All right. And again, your key levels in the futures market, typically price is not just going to poke through and then turn like you have in the spot market. How many times in the spot market have you entered into a position and, the thing barely stops you out and then does exactly what you thought it was going to do? Is that, if you find that that's happening to you on a regular basis, then, you might want to consider the Forex Futures. Okay? All right. Let me share another one with you here. I brought up a chart. This is the euro. Okay? Let me just scroll back. Okay, and yeah, so Jason W., good question there. And I can tell you the graduate program at Online Trading Academy certainly helps me with that because I lead day trading sessions and swing trading sessions. So I'm kind of forced to prepare for both, right? But what I find, I can tell you, if you looked at my active trading statements, you'll see that the market that I trade more than anything else by far are the Forex Futures. More than the S&P. I trade a lot of different markets, but by far the lion's share of active day trades, short-term trades, are in the Forex Futures. Okay. Let's see. Yeah, so Boyke, good question. If you're in a trade and at an expiration, okay. First of all, a couple things to that. Number one, these expire March, June, September, and December. Okay, and you'll see on the website exactly when those are. So let's say you're stuck in those and you forget to get out. Well, it's not like the old days. If you're in a position and you're coming up to expiration, the broker's going to get you out of that position. Otherwise, they'd kind of be putting themselves at risk, right? And if you're in a position that you want to stay with, let's say you're in a longer term play and you want to stick with it, you can just roll that position right into the next front month. Okay. Okay. All right. Yeah. So Rob, what determines the decision to trade spot or futures? Again, when you're trading, it's the difference between trading on a centralized exchange and the difference between trading on a market that is really your broker is creating for you, which is the spot market, right? Okay. There's a big difference there. The centralized the market that's on the centralized exchange is going to be more efficient. It's going to be tighter. All those things, right? And you're not. Again, the broker's not on the other side of your trade, okay? There are rules and regulations that have to be followed, right? The Forex Futures are super highly regulated. You can't really get more regulated than the futures market, right? In the U.S., okay? All right, so here's one in the euro. Let me recapture the screen again. Okay. So again, real simple setup here. I don't want to spend too much time with this. The origin of a rally here, again, short-term little 10-minute charts. Prices decline back into that area. It's fairly low risk to buy into this. As you can see, we're risking about 10 ticks here, okay, times $12.50, okay, for a target right up here of about 25 ticks. So risking about 10 to make about 25. Okay, here's the supply, retail prices, demand, wholesale prices. The distance between the two, that's our profit margin. Again, if this market was in a little short-term uptrend, okay, I just bought when things were on sale, okay, all right, and all right, not a whole lot to talk about there. Again, just want to show you some real examples, some real trade examples of short-term trading in the futures market. Again, trading these markets in the big picture is fine. Nothing wrong with that. Okay. And remember, what we're really doing here is, let me just grab this again. There we go. Now, and as I'm talking through this, I'm trying to read back through the questions here. Yeah, so good question there about if trading spot would be okay to use supply-demand levels seen on futures charts, as they seem to be a little clearer. They're going to be clearer, I agree, on the futures charts because, again, they're more efficient, right? There's a central exchange there, which is missing for the retail spot Forex trader. That's why you see so many wicks, right? That's why you see once in a while you get stopped out and you don't even see the print on the screen. Okay, that doesn't happen in the futures, spot Forex futures. So there's nothing wrong with using the futures charts to help you make decisions in the spot Forex. But take a look at this. So what's happening here again? If you look at the, let me go to, hang on a second. Yeah, let me get to any of these, really. Oh, we'll just use this one. Hang on one second. So here's an email that came in a while back, but I want to use this example too because I just dug it up for two reasons. One, so you can see what some online trading academy students are doing, and number two, so you can see an example in the big picture of Forex futures. This is an hourly chart of euro against the U.S. dollar. Okay. Yes, whoever's asking that question about the direction, yeah, they definitely move in the same general direction. They can't really not move in the same general direction. It's not like they're different markets. They represent the exact same market. Okay, there's one from a today price perspective, and the other one from a perceived future value of that market. But they're going to ebb and flow in the same direction. So notice the supply level up here, the origin of the collapse in price. This is one of our XLT members that he primarily swing trades these futures, right? Okay. Again, same concept. Selling short up here to the buyer who's making those same two mistakes. Buying after rallying price and right into a price level where supply exceeds demand. But no matter what you're trading and everything else, don't the people that I see doing well are the ones that are not just focused on the picture, the pattern and the picture on the chart. More importantly, what comes before that is you have to understand what you are looking for in a market, okay? And then figure out what that picture looks like on a price chart. That's the proper way to do this for all you new traders out there, okay? In other words, you have to forget about charts, forget about theory and all that other stuff. How and why do prices turn at a level? They turn at a price level, because supply and demand is out of balance at that level, which means they have to turn there, right? Given that information, okay, your quest should be to figure out exactly what that picture, the picture of a supply and demand imbalance, looks like on a price chart. Okay? So here it is. Rally, base, strong drop in price. The origin of the drop in price is where supply and demand is out of balance. Okay? Given that information here, again, who in their right mind is buying over here? All right? This gives you a nice low risk and high reward entry into this market. All right. So let's go out to the live markets now. Let's take a look. at, let's take a look at the euro. Let me just get the charts up for you. Okay. And yeah, Jose, he's been doing this for a while. He's pretty good at it now. All right, so here are multiple time frames of the euro. Here's that level we were watching. Okay. Again, little supply area here. Short-term traders can lean on that supply like a floor trader would, right? Okay. Well, hopefully I captured that for you. There we go. So short-term traders can lean on this supply level. Longer-term traders would probably wait for a level a little bit higher. All right. Let's go to, we've been looking at euro here, so let's click over maybe to, oh, I don't know, the yen or something. Something different. Okay. Here we go. All right. There we are. Okay. So you can see, pick any time frame you want. Maybe we'll look at this hourly chart. Now you'll see on this hourly chart we have Bollinger Bands on this chart. Okay. One of the things we one of the things we look for, I think you saw a couple of people type this in already. We call them all-star entries. What an all-star entry is when price pierces an upper or lower band and trades into a supply or demand level. That becomes an all-star entry for us. But you could see any of these, rally-based drop supply levels. Notice the first time you come back into those levels, especially when you're piercing the bands, right? Here's a level. Here's a pullback into that level. Or I should say, here's the pullback into that level. Okay? These are very efficient markets. Again, not every trade is going to work. That's why we focus first and foremost on the risk. Okay? And we'll find some opportunities going forward. All right. Let me take a look here. Let's see, Nick. Big question here. Let me try to get to that. Euro yen. 5-minute demand area formed April 9th. And my chart just triggered an all-star set with Bollinger Band. Take it because I wasn't sure it was about level. Yes, you want to make sure it's a fresh level. Okay. And let me keep reading. Five-minute level. We'll look at the euro yen next. Okay. But I just wanted to share with you again. You'll see your key levels. Price responds pretty well to those in the futures market. You don't get a lot of wiggle room. That's the whole point. Okay. You're not paying a spread, right? Well, I shouldn't say that. I should say you're charged a commission to trade these. Okay. We can take a look at. Okay, there's your euro yen. Okay. Yeah. So the ones that I've been showing you, remember, I said this before. I'll repeat it again here. When you're trading the Forex futures, you're only going to want to start trading the majors against the dollar. So the dollar yen, the euro dollar, dollar Canadian, dollar Swiss, dollar pound, and forgetting one, the Aussie against the dollar. That's where the volume is. In the futures markets, while they offer the cross pairs, there's not a ton of volume there yet. Okay, right? No, it is a pair. It's a yen. It's just the pair is the yen against the U.S. dollar. Okay. Let me get back to the charts here. So here's that euro yen, and someone was talking about a 5-minute level that was just hit. I think they said from the 9th. So let's take a look. We're gonna have to scroll back a bit. Here's the 9th. This is the area here. Let me just put a horizontal line in here. All right. And let's take a look. All right, now let's scroll forward. All right, so Now, one of the big odds enhancers we want to look at, okay? Now, remember, we're not looking at this chart that you're looking at now. Whoops. Here we go. Remember, this chart that we're looking at now, this is the spot Forex, okay? You had a nice little turn here, but remember, you're approaching this level, which is too much supply just above, okay? And, price kind of keeps piercing this little area here. So, again, on a 5-minute chart, I would not take this trade in the spot Forex. I've just seen it too many times. For me, it's just not worth it to very short-term trade in the spot Forex. I'm much more comfortable doing it in the futures because if price is going to turn, it's typically not going to punch through the level like it will in the spot Forex. Okay. But what would probably keep you out of this trade? Whoever asked, remember one of the biggest most important odds enhancers is how prices reach the level. Here we're reaching this level with key supply levels sitting just above. Okay, so be careful with that from a short-term perspective. All right. And on that note, I know we're supposed to wrap up here. Okay. And again, if you came in late, we covered a lot of information in the beginning on the nuts and bolts of the spot Forex market versus the futures market. Again, I'm not here to really push one or the other, but just expose the pros and cons to each for you. All right. Right. I have no agenda other than your success. So on that note, I'm going to put my email address in here. There you go. There's my email address. Okay, so send me an email anytime if you have more questions about it. And hopefully that was helpful. Have a great day.